Welcome to the Fintech One-on-One podcast. This is Peter Renton, chairman and co-founder of Fintech Nexus. I've been doing this show since 2013, which makes this the longest-running one-on-one interview show in all of fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, the Fintech Blueprint with Lex Sokolin and Fintech Coffee Break with Isabel Castro, or listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Before we get started, I want to tell you about the many opportunities you have to reach the Fintech Nexus community. We have an entire suite of digital products that includes webinars, in-depth white papers and case studies. We have advertising opportunities within our newsletter, website, and podcasts. We also do sponsored articles, dedicated emails, and much more. We can create a custom program designed just for you. If you want to reach a senior fintech audience, then please contact sales@fintechnexus.com today. Today on the show, I am delighted to welcome Paul Ricci. He is the CEO of Best Egg, formerly known as Marlet Funding. Now, Best Egg, one of the early players in the fintech lending space, been around for quite some time. And Paul has been with the company pretty much since the beginning, and he took over just last month from founding CEO Jeffrey Myler. We've had Jeffrey on the show before, but this is Paul's first interview since taking over as CEO. So wanted to really get him on, talk about the transition to the CEO role, but really dig into what's going on with Best Egg, because they have got lots of innovative new products that we haven't talked about on the show before. So I wanted to dig into all of that. We talk about the bank partner model. We talk about the financial education and financial health. We talk about the fintech lending landscape overall and much more. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Paul.
Thank you, Peter. Happy to be here.
Great to have you. So let's kick it off by giving the listeners a little bit of background about yourself. I know you've been in financial services for a while, but tell us some of the highlights of your career to date.
Prior to taking over the CEO role here at Best Egg, I served as our CFO and Chief Risk Officer, and I had been the CFO at Best Egg since its founding in late 2013. But for a couple year break that I took in 2018 and 2019, which we can talk about. But prior to that, I've had the great fortune to be part of a few different startups and early stage companies, which has just been a great experience for me. I really get a lot of energy and excitement around building businesses and building finance departments within businesses and having a hand in developing culture and strategy with companies at that stage. So my first experience with that was back in 2000, towards the end of the dot-com bubble. I was part of a startup business that was an online bank called Juniper Bank, and the company's primary product was credit cards. Shortly after starting the business, the dot-com bubble burst, and so we had a lot of great people that were trying to figure out both how to build a business as well as fund the business when the capital markets dried up at that time. So that was a great experience. I remember saying to myself, I don't know how long this is going to last, but however long it lasts, it's the best experience that I could ask for at that point in my career. And that business was ultimately acquired by Barclays and became Barclays' US card business, and is a very successful, profitable, large card business at this point. From there, one of the co-founders of Juniper, myself and a couple other colleagues from Barclays, founded a company called Epic Research, which is a marketing consulting business taking the direct-to-consumer, analytically driven marketing capabilities of a card business to other financial institutions and regional banks to help them acquire new customers. And that was a great experience as well, building that business. But, I sort of found that I preferred being in an operating company versus a consulting company. Mm-hmm. So I moved from there to another startup that was that was started by the other co-founder of Juniper. It was a retail energy business. So again, we were using these direct-to-consumer, analytically driven marketing techniques to acquire customers and building long-term relationships and value with those customers. And that business was acquired by NRG Energy, myself, and I was there with our Best Egg's founding CEO, Jeffrey Myler, as well as a couple of other folks who are here at Best Egg. So when Jeffrey left in 2013 to start Best Egg, I joined him here, and again, have enjoyed every moment of it so far.
I'd love to touch on, you said you went away from Best Egg and then you came back. What was the impetus to come back?
Yeah, so I did a little bit of a boomerang. Epic Research, the marketing consulting business that I mentioned, had grown and needed somebody to come in and just build out finance as well as marketing analytics and data science. So the marketing analytics and data science areas were obviously areas that I've worked with a lot in the past, but getting an opportunity to build those out from scratch was interesting and exciting to me. So I went back to Epic to do that. Had a lot of fun. I think I did a pretty good job building out those capabilities, but sometimes you have to relearn lessons that you learned before, which was I prefer to be in an operating company versus a consulting company, and had the good fortune for Jeffrey to approach me about coming back, and was excited to do that, but for the fact that he asked me in March of 2020. So the
Right.
timing there was a little odd, but anyway, very grateful to have the opportunity to come back.
Right. Okay. And now you're a CEO. You've been in the job just a few weeks. Tell us about your transition into the CEO role.
I'm excited to take the role. It's a company that Best Egg, something that I'm very passionate about, have spent a lot of time here. I'm grateful that the board, showed confidence in me and in the management team and chose to put me in this role versus looking externally, which they certainly could have done. But I think they saw the strength of the management team, the fact that we had, with Jeffrey, developed the strategy, the priorities, the culture that we wanted for the business. And all of those things are great and aligned both with management and with the board. And so they wanted, to sort of continue that momentum, and felt like I could do that. So yeah, because I've been part of it for so long and have had a role to play in developing strategy, priorities, and culture, the transition's been pretty smooth. The management team is great, so I have great colleagues. The board also appointed a new role, president role here. Bobby Ritterbeck took that role, and he is in charge of the day-to-day business operations of the company. So I can focus on strategy, culture development, managing external parties, and managing the board, along with helping him manage the business, obviously. But that's been very helpful as well to have a colleague like Bobby be able to assume that role as well.
Okay, so then maybe let's take a step back before we go any further and talk about Best Egg. How do you describe Best Egg today?
We're fintech. Our target customer are people with limited savings, and our purpose is to help those people with limited savings navigate their finances with confidence. At least when I think about confidence, it's really about the customer knowing what to do and having the tools to do it. So we've been very focused on that customer segment and designing and building products and services for them. We are in the process of a transformation. We started this business 10 years ago with an unsecured personal loan. And for the first 7 years of our existence, that's what we were. We were focused on that product and serving this consumer with that product. Over the past 2 to 3 years, we've introduced a home secured flavor of the personal loan, an auto secured flavor of the personal loan, a credit card, a flexible rent payment product, and a suite of tools and knowledge base for financial health that we call Best Egg Financial Health. So it's very exciting to see sort of that, different parts of the business at different stages in their life cycle, and what the unsecured personal loan business needs in terms of just innovating around the great business that we built versus what are effectively startups within this established company. It's a pretty exciting time.
So let's just talk about personal loans first, because it probably still is, I imagine, your major product. It was your core product, for your only product for many years, as you said. So it's becoming a mature product. Certainly many of the leading companies now have been in existence for 10 years or more. Can you talk about sort of the competitive dynamics of the personal loan market today? Has it become commoditized? How are you differentiating Best Egg from the others?
Some of the main dynamics in the industry. First, when we started the business, there were dozens, if not 100, businesses that were trying to break into the online marketplace lending space.
Mhm.
That's definitely consolidated. So, I think you would look across the industry and see that there are maybe a handful of companies that have achieved scale and are really doing the marketing, the credit, the operations, either the investor management of this business well, and proud that we're among them. I think you also see the trend that almost without exception, I think each of us are trying to serve our customers with additional products. And so we have a relationship. How do we broaden that relationship with a customer through other products and other tools and services? I think that's pretty common at this point across the industry. So from a differentiation perspective, I think there's a few things. The first is, what customer are you designing for? And we're not all serving or trying to design for the same customer. As I mentioned, our target customer are people with limited savings. And so as we're thinking about the problems we're trying to solve, we're trying to understand their problems and design products for their problems. Now, these products may serve a broader group of people, but that's who we're focused on. That's who we're obsessing over when we're designing products and solving solutions for them. And then I think just having the suite of products that we've developed is itself a differentiator. We have a different set of products our than the others in the personal loan space, so we'll serve their needs in a different way. And again, our goal is to meet their credit needs across their life cycle.
Right. So let's just talk about underwriting for a minute, if we could. I'd love to kind of get your sense of how you've adjusted your underwriting, maybe adjusted the credit box even to adapt to the changing environment. We just we have higher interest rates than we've had. I just saw the Fed raised another quarter point, so that just happened just before we started recording here. How have you changed your underwriting given the context of a very different economy than we had pre-pandemic?
Yeah, so if we take a longer run view of things, over time, we've been trying to serve more customers and expand. So I think that's been the trend, and that's what we're trying to do in the long term. To your point, over the past 18 months, we've been in an environment where inflation and higher interest rates have put pressure on consumers. And so through a combination of we have, and I think this is true across the industry, very sophisticated credit models that do a good job of predicting loss outcomes. And our models have had to be calibrated to increase expected losses given the environment that we're in. And of course, we've had to increase pricing and interest rates to consumers because we're in a higher interest rate environment. So the combination of those two things has had a tightening effect for sure. But again, I think it's our job to try to do a great job at credit and deliver great credit outcomes, but try to figure out ways to serve more customers over time. And so a good example of that is the auto-secured product that I mentioned earlier. So that is a product that we launched over the past couple of months where consumers can use the equity that they have in their car as collateral against a personal loan. And because of that collateral, we're able to expand who we can offer a personal loan to and provide them much better terms than they would otherwise be able to get in the market. So that's just an example of how the new product innovation that we're bringing to market will help us expand over time. And that's particularly important, as you pointed out, in the current environment where there's just a lot of stress on the consumer.
Right, for sure. So I want to talk about credit cards. I used to joke with Jeffrey that it was inevitable, it felt like to me, that you guys were going to launch a credit card because you had so many people from the Barclay card days. So you had this management team full of experience of launching a credit card, managing a credit card portfolio, all that sort of thing. So I don't remember the exact timing. I think it was a couple of years ago that you launched the credit card. Tell us a little bit about that product and how that has been going.
We launched Card in Q2 of 2021. So we are right at the 2 year anniversary of the launch of Card. At this point, we have a couple 100,000 cards that we've issued, and the portfolio is at about 150 million. The first thing is, again, how is this going to serve our customer? And for us, I think that means, how do we design a card? It's not like people don't have access to credit cards. Obviously, a product that is out there. So for us, the challenge is, given where our customer is, how do we design a card that can grow with them, whether that's improving rates over time as they're exhibiting positive behaviors from a credit management perspective, offering additional line over time as they're exhibiting those behaviors. So for us, it's really around trying to connect the product with the experience that our limited savings customer has and their relationship with credit. Card is also it's one of the more complicated products that you could tackle. And so we've been focused on getting targeting, segmentation, credit, operations, pricing, what product to what segments within the customers that we're serving, getting that right. And we're at this point on sort of iteration 2 or 3 of each of those things and really focused on those capabilities and scaling the business in a prudent way and make sure we get it right given its complexity.
Okay, so you mentioned your secured auto product. You also have a secured personal loan product tied to a home equity, but it's not really a home equity line of credit. To explain how that works, it's quite an innovative product.
Yeah, so the collateral is actually fixtures in the home. So things like built-in cabinets, shelves, bathroom vanities, light fixtures. We file a UCC to secure the collateral. And, because it's secured, we are able to offer a consumer, again, sort of more line, a better rate, really give them a better product because of that collateral. And so we found that for certain customers that have a home and have that equity, that's been an innovative and good product and provided us as a business, lift from a conversion perspective. And we are excited to sort of serve that alongside the unsecured personal loan and make sure that we can deliver a better value prop to the consumer. Another example of us just trying to tailor our products to get the best outcome for consumers.
How do you underwrite that? Because obviously everyone knows how to underwrite a home equity product. What you're doing is you're looking at the value that's inside the home that's often invisible to all of the data sources that are out there. So how do you underwrite it?
Yeah, so a good point that you're making is a traditional home equity loan takes a long time to close. That's right. A long process.
Yep.
We're still delivering this product along the timeframes of the unsecured personal loan. So people can get funded within 2 to 3 days typically with this product. So really, it's not necessarily about underwriting the fixtures themselves. It's the same underwriting process that we would take with the unsecured personal loan, but through our observation of credit performance, we can see that the people who are opting for this product and willing to, have a lien against the fixtures in their house and have to resolve that before they can sell the house, like those people, by virtue of them doing that, are signaling that they have better credit performance. And so it's really that observation of credit performance over time that allows us to pass along those credit savings to the consumer.
Right. And so obviously if they don't pay, you're not going to go and take their kitchen cabinets and fridge away. The hook is they're going to have a lien on their house, right?
That's right. That's exactly right.
Right. Gotcha. Okay. I wanted to talk about this flexible rent product. I saw that I think it was just earlier this year. What is it and how does it work?
It was a product of our first acquisition. So we acquired a company called Till in Q4 of last year. Their product was this flexible rent product. So, many of the consumers within our limited savings target market are renters. And for many of them, one of the largest monthly expense is their rent. And of course, they typically have to pay that rent all at once on the first of the month. And that doesn't necessarily line up with how their income is coming in. So they had this cash flow problem. So the concept of flexible rent is that will pay the rent on the first of the month, and then the renter will pay us in installments over the course of the month. So, sort of think of it a little bit as buy now, pay later for rent.
Hmm.
Again, I think it's when we saw the acquisition opportunity, felt like it was a great product fit for what we were trying to do in terms of helping this target consumer. Flexibility is one of the other things that we view as a differentiator, and this fits squarely with that. And the team at Till was just a great team that fit well from a cultural perspective. So it was an exciting acquisition for us for sure. The other interesting thing about this product is the way that we're going to market is through partnerships with prop tech companies. So our solution is being embedded in the payment modules for partners like MRI, Appfolio, Zego, and we're being presented as a payment option when consumers make their rent payments. So it's also an embedded finance play for us, at least from a distribution perspective.
Okay, interesting. Interesting. I want to talk about banking licenses because there's obviously been a lot of the fintech lenders that started, 10, 15 years ago have gone on to obtain a banking license one way or another. Are you still happy with the partner bank model? And do you have any plans to sort of move in the direction of some of your competitors?
We are happy with it. The bank partner model allows us and our bank partners to focus on our competencies and together bring a better solution to consumers. And we've had a really great partnership across. We have multiple bank partners, but I will definitely give a shout out to Cross River Bank, who has just been a phenomenal partner for us over the past decade and very innovative, real solution oriented in helping us and other businesses like us serve customers. I just think it's hard to get the entire value chain right over time, and allowing us each to figure out the places where we can create the most value is, for us at this point, the best operating model. I totally understand why others would look at, sort of the regulatory complexity and challenges that have started to come up, as well as the funding environment, and say, hey, having more control over that piece of the value chain makes sense. But again, for us, for right now, this is a great model for us, and I think it delivers the best outcomes for customers.
Okay, so I want to talk about financial health, and you mentioned briefly that you have a sort of a financial education component now. I'm curious about how you know that you're having a positive impact on someone's financial health, because they could obviously take out a personal loan, pile up purchases on a credit card, and suddenly they're not in the same healthy position or as healthy a position as they were before. So how do you know you're having an impact?
Yeah, so we continue to add features to the financial health platform. We started off focusing on credit health, which again, everything we do is informed by interactions with customers and asking them what is important to them and what they need. So the first place to focus was on credit health. And it goes beyond the score, although the score is the central feature there, but really helping them understand what's impacting their score. How do they improve their score over time? We added to that budgeting capabilities, so they can connect to their different accounts and see their entire financial picture, develop budgets. We just introduced a debt manager feature, which will help people see the entire picture of all of their debt and help them build scenarios to pay that debt down over time and minimize interest costs for them. So, and then there's a whole bunch of a knowledge base and articles that we continue to serve up to help consumers. So in terms of how we know it's helping folks, one is by listening. As I said, we've got a community of users that we're asking how these features are helping them and what features they would like us to add next. We're also measuring, how are people engaging with these products, and how is it improving engagement across the entire ecosystem, and setting goals and targets for that platform in terms of driving increased engagement over time with our customers.
So are you using this as a lead gen tool primarily, or is this a tool for your existing customer base?
At this point, it's for existing customers. So it really is about driving engagement, having a discussion and a conversation with consumers that goes beyond the credit relationship that we have with them. I think there's the potential for it over time to be a lead gen platform, but the focus is getting engagement right at this point.
Got it. Okay. Before we close, a couple more questions here. Can you give us a sense of the scale you guys are at today?
We've accelerated quite a bit over the past 3 years or so. So we're at 26 billion of unsecured personal loans originated over the history of the business, a little shy of 2 million accounts over that time. The portfolio across both the personal loan products and the card product is about 10 billion at this point. Last year, we had a record year, so we did 7.5 billion of personal loan originations, 1.3 million new accounts, over $500 million of revenue. So we've really had exciting growth over the past couple of years. This year is a different environment, but we're continuing to bring new products to market and focus on both growth and profitability for the business.
Mm-hmm. Okay, so in closing, I want to talk about I'd love to get your perspective on the fintech lending landscape. And many of the companies are mature now, it's been around for a long time. How do you think we're doing? I mean, you've been around this space now for a long time as well. How do you think we're doing as an industry? Do you think we've reached our potential? Have we just scratched the surface? What's your sense?
I think the best measure of this is seeing consumer adoption. So you look back over the past 10 years and, from a product that wasn't being served particularly well by the incumbent banks to the growth that the industry has had over the past decade plus. I think the proof is how the consumers are taking this product and using this product and using this product to help them get better outcomes in terms of managing their credit. The industry continues to have growth, so I think those proof points are still there. But to your point, I think the principles that the industry has built itself on in terms of reducing friction, making the process easier, using data to have a more customized and tailored product experience for the customer, those principles can be applied to other financial products. And so I mentioned all the products that we're bringing to market. Those same principles will enable us to grow those products and serve customers more comprehensively across their financial services relationships. And I think you see our competitors in the space bringing other products to their consumers based on what fits for the target consumer that they're going after. So the things that we do well as an industry apply to a bunch of different financial products. And I'm excited to see where the industry goes. And I'm excited about where we're going as well.
All right. Well, a good place to leave it there. Thank you very much, Paul. Really appreciate you coming on the show today, and best of luck to you.
Thanks, Peter.
Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.